reach into the refrigerator and grab one. Hey, so back here with you. Anyway, first of all, let's take a look at the setup here. We just called the setup off of that 53 zone into a small coiled channel breakout type of scenario. And not looking for a lot here, but it is definitely moving up here, and the timing is right. So happy to kind of point that one out before. But even, I think more important, I just did a video. I kind of discussed, you know, the concept, or what I was looking at here, this consolidation up here, and the uneasy feeling that the market was giving us for the last 6 to 8 months. We've been going sideways and chopping around. But at that point, at that sideways consolidation really took place, where the market, let me zoom out here, has been, at the bitter, top from the rally, that the bull market rally, which has really, picked up pace after 2011. Or actually, wait, where are we going to go? I mean, we could go back to 2009, but after that 2011, 2012 pullback, we're talking about, we'll call it 2012 rally. But the bigger picture is this consolidated. Looking back at this pullback, it sure does look like a healthy pullback. I mean, every which way you look at it, you could definitely see that the market was overdue for some selling, and seeing it up here and understanding and hearing all the things about we're extending, coming up the way. We just did not break out. We did not break out. We did not. There was no interest in the market. And this is where we're going to talk about liquidity. Summer dried up here. It dried up here, in the markets. Even though we started seeing a little bit more activity every so often, we get a bigger range day. Basically, it felt like we were watching a snail move, staying in this large range since August, July, June, May, April, March. So all the way really from March, and you could even have an argument going back to January. But March, April, May, June, July, August, 6 months of choppiness. And you got to think that people up, looking at the market at this level, just feeling a little uncomfortable, saying, I don't want to get in it. I want to wait for an opportunity. I want to wait until there's a better opportunity in the market before I get in. Just no interest up here. No one had any interest. No one had interest. My sister didn't have interest in the markets. No one could understand, could fathom why we were holding up. Everything was thrown at the markets, but then all of a sudden we drop off. Now, all those people are waiting for an opportunity. What is the level that they're going to see that this is going to come down to? Paul's looking at, October lows. I definitely have that marked off. We'll have that marked off. We'll watch what happens down to that level. I had something good on a video. We did mark off some good levels on the ES and on the cash levels. So that one level in itself is a big level, but there was another level underneath us. And if we take a look at that weekly chart, this is where you're going to see it. Very interesting. The weekly has not been oversold yet. It's coming down into oversold level. This is an indicator that hasn't been oversold since 2012. This is the first time we're getting back into oversold levels since the beginning of the bull market. So this is the first time we're getting all the way back there, officially underneath that oversold level. It looks like we're just about there. First time since the rally began. I mean, that's pretty impressive. That's pretty impressive. So that's something to definitely watch. What happens when that level that I'm looking at is that actually that 200-period moving average comes into about 1776. So we're talking about 1800, 1776, 25-point range into that zone, brings us back, oversold probably on the weekly, brings us back there. The daily's already here. I mean, we might not even get to that level. It's just something to pay, another number to put on your radar there, underneath the underneath that daily October low area, we have that 200 period, the 200 period moving average, weekly moving average, which lingers underneath us at, again, 1770 to 1780. So news definitely is going to move this market. Anything else like that. So now I'm looking at some individual stocks here, and you definitely want to be on, have the wind in your sails. So if we're looking for more downside in the market, it's going to be very hard to step into any longs. It's better to trade the ETFs, I think. Really start to pinpoint some of the better levels in the market. But we shall see. I mean, if Apple tonight sold off. I mean, what did we close out on Apple? We're down at 102. So closed. What time did we? I don't even know. We're 104, 103, 104. I mean, Apple here just slowly sold off with the futures overnight. There's tremendous volatility and action in the overnight trade. I mean, you could have traded Apple to the downside and got a point off of it overnight until 8 o'clock. The moves we're seeing here off of 1850 up to 1860, a 10-point move just played out in the markets. Strange times here. We had a couple oversold levels, and not always the best scenario playing out overnight trade, but you can see what happened here. We had a coil stochastic breakout. We talk about our first strategy sell zone is a push back up above that 80 line, and that's an option. That's option one. If you start to feel that other things are lining up and you're looking for more, well, then you take it off, you let it ride. But the majority of the time, seeing this rotation here, we talk about it so much that when we do see it and it reacts off of it, it's just like, yeah, that's what you normally want to see. The odds of it not happening sometimes are always, in the back of your head, give you gives you the doubt that this is a time it's not going to work. So maybe, I'm actually looking forward to getting a little bit lower. And right now what I'm doing is doing some charts, measuring out. I'm going to have to start over again because I started talking, and that's what happens when I start talking. I start charting. Facebook, nice breakdown. Look at how that one came down to the 70s, back up to 83. Oversold here. Love Facebook. So I'm going to continue on doing some research here, and I'll get back to you in a bit. And again, another look here of that setup, that recent setup here. Was at 745, and now we're pushed up against the 200 period moving average. Just an update on that. So we're just talking about Beauvais and talking about the lack of liquidity and seeing that market drop off. And I don't know if I had actually finished up mentioned some of the thoughts we talked about on the earlier videos. Just that the market had nobody interested up here because it's made such a big run for the last since really 2012. I mean, it's not that if we go all the way back. 2009, this looks like just something that's not super unexpected. I think the way it happened, the quickness of it, and he's mentioning this in this article, and he let me go back to where I was. So noted in a moment. It says Beauvais puts blame on two places: technology and high-frequency trading, whose participants may now control overall market activity in the short run, as well as government, which has eliminated any possibility of either private sector firms or Federal Reserve providing liquidity to the markets. At its base, the key problem is that the historical protections that once existed in the markets to prevent massive downside have been removed, he said. The country claims it has deep and liquid markets, but this is being put to the test. So, is this a high-frequency meltdown? Will this, the volume now lead to more volume? Will the selling lead to more selling, or is this a correction that happened happens in a faster environment that, today with high frequency trading and, electronic trading. Is this just maybe the part of the new norm? The pullbacks now, more aggressive and more fast as machines take over. Both accomplishing the same thing, a pullback. Again, it's oversold on the, in the rotation here. But is it a healthy way of doing this? The Band-Aid being ripped, or is there, get this over fast, the dip, it's all going to play out in the next couple of weeks. It really is. We're not going to say we're experts in it, because if we were, we'd be loading up right here. But, it just doesn't always work out. You have to protect yourself. Looking at maybe the possibility of a further flush and a reversal. When we see that oversold level and that reversal candle, the odds would go up for that big reversal to play out. So sometimes you actually got a little further downside, you're oversold, but then you come in with a nice outside day, or maybe we spike down and close on the highs and put a nice hammer in. Those would be a little bit more interesting. And once we start to see that play out, it's not a given, because at the end of the day, we get a severe sell-off in this market here. Even looks like yesterday when we spiked, we started off, we pushed up, we spiked down, and then we came back strong. It looked like a beautiful hammer, but then we sold off again. And again today, we're having a decent inside day, but at the end of the day, selling off, and now aftermarket moving lower. So it won't be easy to call a reversal candle until the latter part of the day, but definitely some weakness. I'm going to watch that weakness that comes in the morning. See if we get down to some of those levels we're paying attention to. Close out on the on this little segment here, just talking one more time about this little flash breakdown here, and this is brings us down to that 1830 level. We're 1862 now, and I actually push. You can see here first target, looking at that, and then from that point on. We'll see what happens. Decent little pop here. I'm actually kind of recorded a segment for just to update people, maybe not listening, actually update the members, as I'll send this out in a little bit, along with the other video, which is already out on YouTube, talking about some of the technical levels. I want to continue on with my research. I'll be back with you a little bit. Now I'll start talking about it, because I'm finishing up. I'm actually recording this little segment here, and kind of for people out there that might not be around, I'll send this out with a blog alert in a few minutes. But kind of just to leave off here, and I have to grab something to eat. Oh, well, that's right. So I was actually just finished going over my scan of my HPS watch list, and because of the volatility that came on Monday, the big candles, very hard to establish any pattern setups. Just not seeing anything jump out at me. There's definitely a core group of stocks I'm following. There's some really good names out there that you want to take advantage of when they come back. But are we going to get a further move down here in the markets? That's our main concern right now, because that's going to, that's our wind in our sail. So if we're pushing down, we want to make sure we're not fighting that type of tide or anything like that, especially in the volatility. We'll see what happens tomorrow. Asia is going to open up in less than an hour. That should give us our first clue of how things might start off here. And then, of course, the overnight European Open. It'll happen early morning hours. And then we're going to open up. We'll have a pre-market here very early, and I'll get in here again this tomorrow morning.
NQ Tradeometer overbought. YM Tradeometer overbought.
So we're leaving. I'm leaving some of the indicators. I was actually going to leave the Tradeometer up. I'll try to put it down here so it's not in anybody's way. I might have to push this down a little. Like here. All right, that's what I'll do. Just so we have let's see where that is. I'll leave the Tradeometer up here tonight. All right. So let me stop this video, get this sent out, grab myself something to eat. I'll be back. It will be. Yeah, Paul. Going to be a very interesting day tomorrow.